Hello everyone, welcome back to Upside Down Data. I don't think I need to tell anyone that there's been blood in the water. I'm sure we've all been noticing that and feeling that as it's been happening. And it's been kind of a whiplash type of occurrence that's happened, right? You know, we just had the May FOMC Fed meeting. The market initially actually reacted quite positively to that meeting. You know, Bitcoin rallied 5% coming off of that news. But then we dropped around 8% yesterday and a little bit more, down about 1% as I record here today. And I think this caught a lot of people off guard. I think a lot of people were expecting something like what happened here in mid-March to happen following the Fed FOMC meeting, where if the Fed did what was expected, which is what they did, they raised interest rates by 50 basis points. I think people thought, okay, if the market gets what it expects, then why wouldn't there just be room for relief? And that's, I think, what a lot of people thought was starting back here on this pump, but instead we've gotten this big correction downwards. What I want to talk about today is some of our indicators we have here at the channel and what they're making of this recent action and how concerned we might want to be based on what we're seeing here right now. So I'm going to show first the Trend Confidence Indicator, or TCI. This is an indicator that basically indicates how confident we should be in a relative uptrend or downtrend, whatever we're currently in at the time. So the idea is that if we're in an uptrend and the TCI is green, that's good. That means we can have some confidence in that uptrend continuing. But if we're in an uptrend and the TCI flips red, or like back here, that's bearish. That might suggest that that uptrend is likely to end, or is flashing warning signs that it's becoming weak, and that a big correction to the downside might follow, like we saw back here in the spring. So I'd actually talked about this back here when we saw the TCI flip red after having been green for many months. You know, I had flipped green back in early February, stayed up there kind of all the way as we rose all the way up to about 40, you know, in this whole run up to 48K basically. And then once we dropped, I think it was around 43K is when it flipped red. And at the time I made a video and I basically said, this is not good news. It started closing down here. Usually you'll see continuation to the downside, and that is exactly what has happened. That we closed red, we kind of moved sideways and down, and now we've moved back down, you know, bottoming out down in the 35K region. And that's the thing, when you close green on the, or excuse me, when you close red on the TCI, there can be quite a bit of downside that can follow. You know, it doesn't have to be like this correction we had back here in September, but it can be quite precipitous. And so if we're just looking at what does this price action mean, there's nothing that's happened with Bitcoin yet that's made the TCI think that we should readopt a bullish standing, essentially. That the TCI, as far as the TCI is concerned, we're in a downtrend, and it darn well looks like a downtrend. And so really, until Bitcoin can start showing some strength, start behaving differently, TCI sees no reason for this downtrend to just immediately stop. It's not going back and flipping green, suggesting it thinks that we're going to be moving back to the upside soon. It's still quite bearish. And in fact, one of the nice things about this model is we can probe it to ask the exact price level it's watching, and before it will flip green again, before it will think that there's, in this case, enough strength returning to the market to get more bullish again. And that's still sitting up at around 41K. And so we're still sitting well below where the TCI would think that we can reasonably become more bullish again. So right now, I think the TCI is signing caution, and that downside is very reasonable from here. Continued downside is very reasonable from here. Now, that doesn't mean we have to go down to the kind of the worst case scenario. You know, a lot of the bears out there calling for, you know, 20K Bitcoin, etc. There's nothing with the TCI saying that we have to go and do that. But certainly, right now, it says believe the downtrend. Don't think right now that there's any particular reason for this to just reverse immediately. That it's totally reasonable from this model's perspective. In some ways, it's expected from this model's perspective that we're going to spend either more time where we are now, or even have to go down further before maybe we can flip back up to the upside. So obviously not financial advice. You should make from this data what you will, but that's what this indicator is suggesting. We're in a downtrend, and we should be relatively confident that it is indeed a downtrend. Now let's talk about another indicator we have here, the Momentum Bias Indicator, or MBI, for Bitcoin. This is another model that we like to look at, and this one assesses something different than the TCI. This one looks at what is the prevailing momentum in the market. Is it bullish? Is it bearish? Or is it to the upside or to the downside? So 0 is, this is a Z-score, so 0 is the average. the average momentum in Bitcoin, basically. So obviously that's positive because Bitcoin's overall going up. But then as you go down, -1 is 1 standard deviation below the mean. 1 is 1 standard deviation above the mean. And what we talked about a lot before is that bear market signature on the MBI is when you're spending a lot more time in the green than in the red, and a bear market signature is when you're spending a lot more time in the red than in the green. And that is exactly what we're seeing right now, unfortunately. That ever since really November of last year, we've been behaving a heck of a lot like a bear market right now. We can see that it's not too dissimilar from these past bear markets we had in the past, where we get pushed down to the downside, and then any attempts we have to come break up above zero to kind of reestablish a prevailing upside momentum bias, we just get rejected down. And that first kind of rejection happened back here in that kind of fake out pump up to 48K that then got rejected, and we're moving back down. And this is not, a good sign. That when this kind of behavior starts happening, when you peek your head up and then get rejected back down, doesn't mean that you're in more of a bearish territory, and that more move to the downside often can follow. We've seen that here, peak above. Here we didn't even make it up, more downside. Here we did make it to the green, but then more downside. Made up to the green, more downside. So it's very plausible from the smallest perspective that more downside could follow from here. Doesn't have to, but it's very plausible that that could happen. And so really just when I'm seeing across the board, the TCI and kind of more the short term saying this is a downtrend, believe it. MBI is saying that it does look more like a bear market right now than a bull market. And so really, if I had to be guessing which is more plausible, move back up to all-time highs or setting in new lows, certainly I would say setting in new lows is more plausible right now. Again, just my interpretation, but that's what I'm seeing in this data. Now, the final model I want to talk about is our risk indicator, the upside downside potential indicator for Bitcoin. So this is a machine learning based model that we have here that assesses risk. So basically showing the price history of Bitcoin across time. The higher the value, the higher the risk. So when you're getting up to 3, 4, 5, that's high risk. That's when the upside potential is low, downside potential is high. And then down in the green zone, that's when the downside potential is low, upside potential is high. And one of the things that's interesting that happened is as we came down here, we actually went down below -3 right here at the absolute bottom back in late January, back at around 32K where we bottomed out back then. And then after that, the UDPI had been tracking back up. So we have been realizing upside potential, but this has also been trending back towards neutral. And one of the things I talked about was that could be partly the model kind of building in the possibility of a capitulation, kind of getting itself ready that there is more downside that's plausible. And if that happens, it's kind of building that in. That's basically saying that the floor is moving down, and so we should be a bit more concerned. So if I flip over to the raw output of the model across time, that's what I'm showing you here. So the white is UDPI level, the yellow here is just the Bitcoin price overlaid on top here. And what we can see is that we did set in that bottom in late January, right as we bottomed out at around 34K, or excuse me, 32K. And then we've been tracking back up. And one of the things I talked about recently when looking at this behavior was that this might be kind of building in the possibility of a capitulation, the possibility of continued downside to follow. And so it seems like we might have started to realize some of that downside. It's made a top, it's moving back down. And so this is what I'm going to be watching closely, because certainly there's a lot of downside here that is plausible. And so if we were to get some kind of a big capitulation like 2018, like 2020, that could be the model basically building in that possibility to move down to the downside. But of course, that doesn't have to happen. One of the things I'm actually going to be looking for that could be a bullish sign is if this trends back down, but then if we reverse somewhere higher, then we reverse back here. And the reason I would say that we'd be bullish is that one of the things you'll notice about the UDPI is that in past bull markets, you'll see higher lows being set in on the UDPI as those runs happen. So, setting in lows, and then higher lows as you go through, lows, higher lows as you go through. And so if we can maintain that structure, that might suggest that we're not necessarily going to be seeing such a massive capitulation, that this could still overall be a bullish structure, even amongst all this ugly price action. But that's something we're going to have to wait and see how it performs, right? Certainly if we get a huge capitulation off of here, we could just plummet down to these really low risk levels. Now, barring a complete, stock market collapse and something like 2008 or 2000 happening where we enter into some massive market crash across the board. Barring something like that happening, one of the things is that if we ever do get back down into this -4 level, this has oftentimes been the best possible time to be buying Bitcoin in its history. You'll note that every time the long-term UDPI, and I should mention this is the long-term version, so it's reactive to moves that play over months, so it's more macro-focused. You'll notice that every single time it's broken below -4 in its past, these have been the absolute best times to be acquiring Bitcoin. Right here, so the bottom of the 2011 correction, here in this kind of double bottom of the bear market in 2015, and then also 2018, the big capitulation, and then the March 2020 crash as well. I think most people would identify those as being the absolute best times in Bitcoin's history to be buying Bitcoin. And so if we were to have a big capitulation down to these levels, and assuming that we're not going to get into some new paradigm in the markets where old patterns are no longer predictive of anything in the future anymore, that could very well just be a massive opportunity for anyone who has cash waiting on the sideline to accumulate. We'll have to wait and see. There's no guarantee that's going to happen. And of course, if the stock market goes into a full-on, financial crisis like 2008, then all this could get thrown out the window, because who knows how Bitcoin's going to behave in a full-on recession. Bitcoin could, this kind of overall bull market we've been in its entire history, maybe that would actually break for a while in that kind of environment. We really don't know. We'd have to wait and see. But assuming that doesn't happen, if it's just kind of a more of a big capitulation and more of normal market conditions, that could actually be a massive opportunity. So what am I seeing across the board of all these indicators? Well, I'm seeing certainly in the short term very little reason to be especially bullish right now, or to call the bottom necessarily just yet. Bottom could be in for all we know, right? We could just continue moving up and everything would be fine. But I'm personally going to be waiting for the TCI to flip green again before I get too excited. Anything that happens while the TCI is red, I'm just going to be seeing as noise. Obviously, you should do with the data as you will, but that's just the way I'm going to be interpreting it. I'd like to then see the MBI start behaving more like it does in bull markets, where we start spending at least even time in green and red and not just predominantly in red. And then also I'd like to see what the UDPI does here. If we form a bottom more higher up, these kind of bottoming points tend to coincide with local bottoms. That could be a bullish sign. Or if we get a massive capitulation, that could just be an opportunity. We'll have to wait and see. All right. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. We'll do updates about our risk indicators and more over there.